Hey, what's up, stock compounders? Brad here. So today I want to talk about Norbert Liu and Punch Card Capital. I was looking recently through Value Investors Club write-ups, and I was blown away to see that the 7 write-ups that Norbert Liu submitted to Value Investors Club, 6 of them won the biweekly contest. Okay. Now, here are some of the things that Joel Greenblatt said about Norbert Liu. Of course, Joel Greenblatt seeded Punch Card Capital, Norbert Liu's fund. He said, after he wrote up his first idea on Value Investors Club, we spent the next 2 years talking to him and trying to recruit him to do something with us, just because there are few people as brilliant as he is. To this day, I hand out the first 3 write-ups he wrote on the Value Investors Club every year to my students at Columbia to show them what a brilliant, concise, straightforward, and clear investment thesis looks like. We're going to see some of these in just a few minutes. You can't ask for more than what Norbert wrote, okay? So, really singing the praises here of Norbert Liu. One more, he went through a very tough time in 2008, and he was really unperturbed as far as I could tell. He was serene throughout. He thought what the values were, and he stuck with his guns like very few people could. Okay, so these are very high words of praise from Joel Greenblatt, who of course crushed the market himself for 10 years between 1985 and 1995. I just found out, I was reading an article about Norbert Liu. There is not much out there in the public domain about Norbert Liu. But I think this article from Santander, it mentions Norbert started managing money for his mom. He was managing her retirement account. So he took over when it had $60,000 in it, $60,000. 9 years later, it was more than $1 million, okay? A 38% annualized return over 9 years. So just incredible. And we're going to see, the brilliance of Norbert Liu in some of these write-ups. So the cool thing about Value Investors Club, one of the cool things, is if you know somebody's handle, you can go and you can look up all of their write-ups, okay? So Norbert Liu's handle was Charlie, surely after Charlie Munger, Charlie 479. Okay, and I'm going to link to this in the description if you want to go and you can click through these write-ups yourself. But I wanted to get a sense, what size companies was Norbert Liu investing in? What industries, right? What were some of the shared characteristics? What were the catalysts that he liked to look for? How much of a, price value disparity was he looking for? Was he looking for 30 to 50 cent pops at a time? Was he looking for 5 to 10 baggers? What made a great investment for Norbert Liu? What actually got him to pull the trigger? Because he didn't do it very often. He actually refers to that in one of these write-ups. But let's dig right in. We're going to go in order. Oldest first, NVR, write-up from 2001 to 2009. So NVR, this is really the investment that put Norbert Liu on the map. NVR, one of the greatest investments over the last 30 years. In fact, I think, if you look over the last 30 years, what U.S. company has had the highest compound annual growth rate? I'm pretty sure it's NVR. So what are some characteristics here? Market cap, 1.4 billion. Okay, so it's a small cap, right? Less than 2 billion market cap. NVR is a home builder. Their operating model, which is unique, described later, allows them to assume the least risk in the industry and produce returns that are the largest. Well, that's a pretty compelling position to be in with regards to all the other home builders. Home builders are generally dismissed because they're cyclical and interest rate sensitive, though which industry isn't? And downturns inevitably leave home builders holding large inventories of unsold properties. The unlevered builders then suffer large inventory write-downs while the levered builders go into bankruptcy. However, NVR's model will prevent it from suffering the same fate. And indeed, NVR will prosper in a downturn at the expense of the weaker builders. Okay, so you guys can read through this yourselves. I want to get down here to the catalyst. The catalyst, the small number of shares outstanding, occasionally creates large downward gaps. NVR's recent 25% drop is one such opportunity, buying opportunities. The share repurchases will continue to drive the stock. Okay, this was really kind of the core thesis, at least in terms of catalyst. What was going to move the stock? It was these share repurchases. Hard to overemphasize the magnitude of the repurchases or the wonderful track record of buybacks. So you can see here, December 95 to April 2001, I think it was like 36% of the outstanding shares had been bought back. Okay, so very aggressive. And of course, it continued to be very aggressive. And that's a large part of what drove the returns for NVR shareholders. I will point out one thing in this Santander article, which I will also link to. The right to reinvest capital was the real secret of NVR's growth, even more than the share buybacks Norbert had initially focused on. The company's ability to plow back the capital it generated into new and equally profitable projects propelled it from a company with 70 million in operating profit in 97 to over 270 million in 2000. Okay, just a 3-year span. You're nearly quadrupling the operating profit. You actually want the companies that have such bountiful reinvestment opportunities that they don't buy back any shares. Okay? I know a lot of people talk about a company's ability to reinvest as being important, but I think even then it's underappreciated. It's very hard to beat a business that's compounding at a naturally high rate of return. So, just great stuff right out of the gate from Norbert Lu. Let's look at the next one, Windmill and Company. Look at this, 3 million in market cap. Okay, ridiculously small, nano cap. Windmill and Company has net cash of $3.91. The stock trades for $1.70. If the stock trades to net cash, the total return will be 2.3 times, or 130%. Generally, the catch in companies that are trading for below cash value is there are substantial liabilities, one, or there is a large operating burn rate that is depleting the cash assets. Neither of these apply here. Okay, it goes on to talk about that. It's a securities firm. There was a lot of fear around one aspect of this securities company. And Norbert thought that's way overblown. So the catalyst, company trades for less than 50% of cash minus total liabilities. Company may be sold as the chairman approaches retirement. Okay, he's 71. Third, the mutual funds had decent performance in the second quarter. Midas Fund alone was up 9%. This should positively impact the second quarter results when they are announced. Okay, so different, certainly different from NVR. This is more of a special situation kind of play. An incredibly small company. The next one, NII Holdings, which was formerly named Nextel International, is the first investment idea in over a year that I have found worth posting. Okay, so this really gives you a sense, okay, this guy is willing to sit patiently until he gets a fat pitch. Okay, that is an incredible quality of Norbert Lu. NII Holdings was incorporated in 1996 as a wholly owned subsidiary of Nextel Communications to hold all of Nextel's international wireless assets. So what is this one? International wireless assets. It's a 205 million market cap company. So, you're kind of between the small cap and micro cap here, more in the micro cap territory. There's no debt. I forgot to mention the first two, no debt, okay? And that's going to be a theme throughout these first 7, the only 7 write-ups that Norbert Liu put out. There's no debt, okay? There's no net debt for these companies. So this is a post-bankruptcy situation. Obviously another special kind of situation. Having just emerged from bankruptcy, under-researched, neglected equity, shares began trading on over-the-counter bulletin board a few days ago. There's no equity analysts following the situation. Much of the financial detail is buried in 100+ pages of disclosure statements and plan documents. This reminds me a lot of situations that Joel Greenblatt would have been interested in when he was starting Gotham Asset Management. And really the focus of his book, You Can Be a Stock Market Genius. Low valuation. Let's get down to the catalyst. Emergence from bankruptcy tends to be a pretty heavy cloud hanging over companies when they emerge from bankruptcy, which in this case turned out to be the opportunity. Eventual move off the bulletin board onto NASDAQ should raise the profile of NII. Valuation will normalize to 5 times EBITDA from 2.8 times EBITDA currently. NII would trade at $28.10 if it were to achieve a 5 times EBITDA multiple. So $28.10 from $3.41. Okay, it's like an 8-bagger is what Norbert Liu was shooting for with this one. Next one, MCI. See that Q at the end there. In the bankrupt rubble of WorldCom, there is a $750 million preferred stock issue called the MCI QUIPS, MCPEQ, on the pink sheets. Yes, pink sheet equities in bankrupt companies are worthless 99.9% of the time. There are special features to the MCI QUIPS, however, and they're far from worthless. I believe the MCI QUIPS will recover an amount much closer to their par value of 25 than their current market price of $8.10. Okay, so we're looking at something like a 3x here if those recover to their par value. So, you've got preferred stock here. There's a lot of different things Norbert is looking at. Preferred stock in a long distance carrier in the US. Okay, go down to catalysts. Filing of a plan of reorganization in mid-2003. Gradual public realization of structural seniority of the MCI QUIPS to the WorldCom bonds. Okay, so they're at the top of the stack. Emergence from bankruptcy. Elimination of view of QUIPS as tainted security when it moves off the pink sheets. Okay, so some of their similar catalyst themes that we've already seen from Norbert. Next one, Sportsman's Guide. Sportsman Guide has an unleveraged return on equity over 35% and trades under 5x free cash flow, defining operating cash flow minus cap expenditures. The company is a retailer of sporting gear and other outdoor items. It sells its products primarily through its catalogs and website. If you are not familiar with this company's wares, please check out and spend freely. Little entertainment there from Norbert. Company is a strong niche brand. The loyalty of the customers. Okay, there's a Buyers Club initiative, which is a membership. Members purchase a yearly membership for $30 to receive catalogs with limited run items available only to members. Okay, this makes me think of like a Sam's Club, Costco kind of situation. Key competitive advantage for a catalog marketer is its database of customer names. 85% of the company's revenues come from existing names in its database. Let's jump down to the catalyst. The company has recently initiated a share repurchase program. Okay, so again, this is the first time we've seen since NVR this focus on repurchases as a catalyst to retire up to 10% of its outstanding stock. The company has a history of returning capital to stakeholders. Talks about the debt pay down in 2000, 2001, In 2002, cash simply built up because the debt was retired. Now that the company is debt-free, it is using a portion of its cash hoard, currently equal to about 20% of its market cap, to retire a substantial number of outstanding shares. So there you go, 46 million market cap company. All right, so we're down again in nano cap territory. NVR so far is far and away the biggest market cap company we've seen. The rest have all been kind of nano and micro cap. The next one, Quinsa. I'm going to assume that that's how that's pronounced, Quinsa. Here we go, 1.4 billion. So similar size to NVR when Norbert took an interest. Very high quality business with excellent returns on capital. Stock sells at a cheap price and a change of control is going to occur. So we have the dominant beer brewer in several South American countries. Beer brands account for 79, that was a dyslexic moment, 79% of the market in Argentina, which is the company's main market. Now at this time, everyone and their mother were fleeing Argentina, okay? So it just shows you Norbert, and he talks about this in here. He just thinks, yeah, Argentina's in a bit of trouble, but you know, strong companies like this, he thinks, are still going to survive. And he kind of talks through why he saw that in this beer maker. Enough qualitative stuff, numbers please. So, you know, the first big section is kind of a qualitative assessment of Quinsa. Quinsa trades at about 6 times estimated 2005 EBITDA. 2004 multiple is 6.75 times. Let's get down to the catalysts. Investor recognition of a great business. Resumption of buybacks. Change of control at a large premium as early as April 2006. Controlling shareholders may offer to take the company private before then. Recent price increases and future increases will begin to demonstrate the company's true earnings power. Okay, so here he sees it's a great business and it's cheap. So and they're doing buybacks, right? Similar playbook from NVR. The next one, Telemig Cellular, TMB. Let's call it TMB. Again, 1.4 billion market cap. Okay, so another small cap. Net cash of 454 million. I believe Telemig's controlling shareholder will try to acquire the company's remaining shares and ADRs in the next few months. Telemig is a wireless phone operator in Brazil that trades just under 3 times EV to EBITDA. The ADRs trade on the New York Stock Exchange. Telemig was one of 12 phone companies formed a decade ago from the split up of Brazil's telecommunications monopoly. Telemig operates... Anyway, you guys can read this if you want to. So here, I mean, you've got a wireless phone operator in Brazil. Okay? So Brazil, Argentina, you know, he's not afraid to go places. Obviously, Brazil and Argentina are similar, you know, in about the same place in the world, so maybe that helps. But it's pretty impressive, the diversity of ideas here for Norbert. What do we have for catalysts? Operational synergies manifest themselves in the coming quarters as Telemig operates under Vivo umbrella. Possible special dividend of the company's large cash balance. Continued consolidation among Brazilian wireless carriers, reducing the number of competitors, so becoming more of an oligopoly type situation. Acceleration of subscriber growth as Vivo and Telemig roll out the iPhone. Tender offer or acquisition by Vivo of the publicly traded minority shares. Okay, so yeah, there you go, guys. So themes. What are we seeing for themes? Well, one theme, he's just crushing these. 6 out of 7 was ranked a winner by the folks who assess these ideas coming into Value Investors Club. He's looking for big disparities between price and value. Okay, he's not looking for 30%, 50% pop. He's looking for 2, 3, 5, 10 baggers. And he's willing to sit on his hands until something like that comes along. Definitely the biggest thing he bought, invested in, was 1.4 billion. Okay, so small cap and below. That's where Norbert Liu was shopping. Industries were kind of all over the map. You've got telecommunications, you've got beer manufacturing, home builder, sports gear retailer, all over the map. No debt. That was a commonality here. No debt. Cheap on a EV to EBITDA basis, free cash flow basis, price to earnings basis. Norbert is looking for companies that the market doesn't like, right? And so they're cheap, which is a theme we see, of course, across great value investors. And then buybacks. Great businesses, buybacks, special situations, right? Post-bankruptcy, preferred stocks out of bankruptcy, and like I said, buybacks. So those are some of the themes that show up again and again in Norbert Liu's holdings. Now, with all that out of the way, I want to jump. This isn't going to work very well. Here, I've got to switch over. Here we go. Ticker. So let's take a quick peek at what Norbert Liu owns now, right? It's great to see what he did in the past. Let's see, how much of that he's still doing today, and maybe what has changed. So we're going to go to Track Investing Gurus in Ticker. We're going to look for Punch Card Management. So here we go. Norbert's current holdings, at least as of third quarter 2022. Berkshire Hathaway, number one holding. It's no secret that Norbert had a bit of a crush on Charlie Munger. Makes sense that Berkshire would be the largest holding for Norbert. Next one, Ally Financial. Okay, now this is different. Okay, this does not fit any of what we saw earlier, at least in the early years of Punch Card. Consumer finance. Okay. A lot of debt with this one. You can see, it's not even showing the debt, but it's consumer finance. We haven't really seen that before, at least in the early years through Value Investors Club. 10 billion market cap, right? Much bigger than anything he was doing in the early years. Now there are pretty strong buybacks for this one. Let's take a quick peek at these. We're looking to look at the balance sheet. Scroll down. If you look at total shares out on filing date, end of 2016, 465 million, okay, down to about 300 million. So buybacks, 36% of shares were bought back over the last 6 years. Okay, 36% share reduction. So that's pretty strong in terms of buybacks. So we do see that theme with Ally Financial, but that's about it. It's much bigger than he's kind of bought in the past, and there's a lot of leverage inherent in this business model. So that's his second largest holding. Let's see, the third largest holding, and this is more like what we've seen in the past, Winnebago Industries, okay? Sells RVs and marine products, okay, outdoor recreation. So we saw a recreation company, Sportsman's Guide, in the early years. Winnebago, 2 billion market cap. Okay, so it's similar in size to, Telemig, to the beer manufacturer, to NVR. Are there buybacks in this story? Yes. Just recently, I think this was August of last year, there was a 350 million share repurchase that was approved by the board of Winnebago Industries. So, 350 million as compared to a market cap of 2 billion, that's significant, okay? Could potentially retire more than 15% of their shares if they're able to, spend that entire 350 million on buybacks. So we definitely see that as part of the story here. 4.2 EV to EBITDA. Okay, 4.2 times EV to EBITDA. I wanted to show real quick what this looks like in terms of how cheap it is versus how it's been historically on an EV to EBITDA basis. If we look at the last 10 years, it's down there, guys. The low was 3 times. I think that was last year, summer of last year, in June. Right now we're just at 4.2 times EV to EBITDA. Okay, it's been as high as 25. The average over the last 10 years is about 10. Okay, so could be an interesting time to dig into Winnebago Industries. The next one, I make it difficult for myself to get back to this, don't I? Should have just opened another tab. Punch. I'm going to punch that card. I just want to talk about one more. Countryside Partnerships. Now, there was a write-up in VIC for Countryside Partnerships. I'm forgetting now who wrote it. But this investor saw a lot of similarities between Countryside Partnerships and NVR. Okay, capital light home builder based in the UK. Now, what happened recently, I don't remember, it was a number of months ago, Countryside Partnerships was acquired by Vistry. Okay, Vistry. I don't know how Norbert feels about that. I don't know if he's as excited about Vistry as he was about Countryside Partnerships. But I'm going to be very curious to see if he takes a position in Vistry. You can see here if we jump into Countryside Partnerships, it's not trading anymore. If you look at the price chart, which we'll look at if this loads, you can see here, it looks like November 11th is when it stopped trading. So that's when the acquisition went through, I presume. But you can see market cap, around 1.5 billion. If we switch this to US dollars, 1.4 billion. Okay. So again, small cap. A little bit of debt. I think Vistry might be net cash. I haven't gone too deep into that one yet, but that could be an opportunity. So out of I think the price to earnings on that as well on Countryside Partnerships was similar to when Norbert was looking at NVR. So lots of similarities there. Going back to Punch. We can see Winnebago, that rhymes with a lot of what he was doing in the early years. Countryside Partnerships, again, rhymes. Remains to be seen whether Vistry, the company that acquired Countryside, is of interest to Norbert, or if he's just going to kind of cut out after this sale to Vistry. I'm not going to get into these smaller positions, less than 5% at least of his 13F disclosed holdings. Naked Wines, really taken a dive over the last year or two. he's still holding on. In fact, he's increased by 11% last summer as it was taking a dive. So again, could be interesting. I'm more interested in these kind of 10% plus positions. It's unfortunate that maybe this is all he owns. Okay, I suspect, given that Norbert has invested in Argentina and Brazil, and it seems like he's casted a wide net. I presume there are positions that we can't see here, but maybe he is really sticking to the punch card approach, where he's very patient, makes very few bets, and this is the entire portfolio. But I just thought it'd be interesting to take a look at what he owns today, and how some of these compare to attributes of investments that he made in the early years, even before punch card, when he was just investing in his mom's retirement account. So anyway, guys, I hope you enjoyed that. It can be so valuable to just look through what these great investors were doing in the early years. So highly recommend reading these write-ups for yourself and gleaning some of the lessons from an investor that has just knocked it out of the park. A very rare bird that came across Joel Greenblatt's radar and was actually seeded by Joel Greenblatt himself. So hope you enjoyed that, guys. All right, I will see you all in the next one. Take care.